But I think we have a caller before we can slip into a break. So we have Ratna who calls us from Chandigarh, and she has investments in Dabur. Hi, Ratna.
Hello.
Hi, Ratna. How can we help you?
Sir, I have 150 shares of Dabur at an average price of ₹40.
Super.
So I wanted to know what should I do with these shares? Should I switch to some other FMCG stock or hold on to it?
All right, Ratna ji, congratulations. First of all, you have bought it in 2006, I believe, at 40 rupees. So you're making big money.
Yeah, average price 40. Yeah.
Superb. Congratulations. Why would you want to switch into something else when you're making so much of money?
Yeah.
All right.
No, sir, I don't know what target price should I expect, or should I hold it on to give to my children?
All right. Lucky children. Let's get some advice. And yeah, Mayuresh, here's an investor. She's hung in there for a good 8 years. Children must be very happy because she's bought it at 40 rupees and she's going home with, she's currently sitting on a big gain. Stock is at 280 rupees. What do you suggest? Should she attempt switching, or it's giving her good money? Why to change a winning combination?
So clearly, Nigel, I think the benefits of long-term investing and the kind of compounded returns one get is a clear example of what the investor has probably done. So clearly she should hold on looking at the acquisition price. And clearly, if one probably looks at the operating performance of Dabur, the performance has been quite decent, even in a challenging environment over the past few quarters, specifically in terms of peer competition and the kind of ad spends that a lot of the competitors were meeting out. Again, I think the management is pretty clear that the volume growth might be a little bit subdued over the next few quarters between that 6 to 10% band. And again, I think within Dabur itself, I think there are numerous segments that contribute to its overall revenues. So home care around 6% of the top line, health supplement contribute nearly 19%. Again, I think the hair color segment contributes 24%, the oral care contributes 14%. And within these segments itself, I think the toothpaste division probably has done extremely well for Dabur. So though probably we did witness a little bit of pressures on EBITDA margins, the kind of fall that one probably looks at crude and crude oil derivatives, I think those will aid margins going forward. And clearly, I think once the rural demand probably starts catching up again, I think the volume growth should again start coming in the higher teens. So in our take is probably from a near-term perspective, valuations looking stretched around 33 times FY16, 28.5 times FY17 earnings. But purely looking at our acquisition costs and the kind of growth prospects that the FMCG industry has over the next 5 to 10 years, probably hold on to the stock. I think you're making good money. I think you will make more money if you hold on to the stock for the next 5 to 10 years.
All right, so that's the advice on Dabur. Remain invested is the word coming in from our expert.